The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento once again, hoping Larry's doing good, and it's my pleasure to be able to sit in, as I say, big shoes to fill, but I'll do my very best, and we're going to be looking right away at the futures. Right now, the Dow, the E-minis of the S&P futures, the June futures are trading at 550 at 1857.75. Had a high today of 1860.25 and a low of 1844.75. That turnaround yesterday, that Yellen turnaround produced a candle that's very interesting, because theoretically, once we went into earlier today, we went into halfway into the wick, round about the 1848 level. It should have tested the low, but instead it went sideways, testing. So the big move up in the candle over the last 120-minute hour bar has taken us to a level where the pullback here is going to be very important, because I'd have to say that going under 1856 would be a negative. Holding here and making a new recovery high would be a short-term positive. And what I told my subscribers on my opening call this morning is that there should be some give back. I always show the E-mini daily and the 120-minute chart with the parameters to watch. I don't give buy or sell signals on these. It's just another service completely that I'd have to have, because you need to follow it up and do all sorts of things. But in the meantime, back at the ranch, this is a nice candle giving back most of the, in fact, losses of yesterday, because the high yesterday of that bar was at 1866.50. And today we've already gone to 1860.25, having gone all the way down yesterday to 1842, round number low. Let me put that in, 1842, round number low. So we've got to watch that. Okay, so basically what we're looking at is that the technicals, that's the MACD and the slow stochastic in the daily chart, are not yet showing great positive action. If the MACD is able to cross positive, that green line, let me expand this a little bit so that you know what I'm talking about. The MACD right now, open, right there. If that, instead of just being flat with that green line, the faster of the two moving averages, giving a wide parameter between the slow. Remember, I call it the faster moving average or the fast moving average, because it is, out of the two of them, the quicker moving average. Basically, what is called is the MACD differential, and that it has a completely different purpose. My purpose in my Chapman wave methodology is to treat it as a moving average, and in this case, a faster moving average than we had, and as a result, most importantly, what I'm looking at is that the stochastic's only at 53%. It needs to get over 80% to be able to sustain a big move to the upside. But I'm also looking at a rotation going on. And we, in my opening call, my service, we have bought a stock that was in the heavy-duty cyclicals that was just being hammered for months. And we were able to get it yesterday almost at the low. And today it's up almost a point from where we got it at 26.12. We got it 25.25. I have to tell you that it continues to be a rotational correction. And if it's a rotational correction, then it won't be, even though I'm looking at weekly and monthly charts that are suggesting that a Dow break into the 15,900s or lower and an S&P break into the, let's call it the 1810 to under 1800, no, let's call it under 1800, could accelerate quite a bit lower until we get there. Right now, it is just lower highs and lower lows that we're looking at in some of the key indices. So in my opening call, we are quite a bit short, and that seems to be working very nicely. And we are also long. What can I say? I'm looking at a mixed market. I want to be in mixed positions. So let me just go through a couple of things, and we'll start taking calls here. The most important thing I'm looking at right now is that the VIX index, and Larry likes to talk about the VIX index, has pulled back. It's at 1507. If the volatility index by Friday afternoon's close on a weekly basis, let's just get rid of this right now. The 120-minute did make a peak E at 18.22 and then plunged, went down to a trough C, and now it's just merely going sideways. But if that starts to go into the 16s, this market will go down. If it holds in the 16s, the market will stay down at the close instead of having rebounds. That's number one. Number two is when I'm looking at this, and I know Larry also likes to look at the home builders, I look at the index itself, the Philadelphia Housing Sector Index. Now, this is terrible. There's some good news coming out, but it's made a peak D in the Chapman wave. Oh, I'll talk about that a little later on. In the weekly chart, possible leg F. It could even be a peak F if by the end of the month, the HGX index, Philadelphia Housing Sector Index, has not gone above 213.81. Right now it's at 201.30. And if it hasn't been able to sustain the good news that came out yesterday, and when it popped up to 208, but then it closed at 203, round number close, and now it's below that, to me, this is just not good action. Look at Lennar. I didn't mention this in my show, in my previous show. I'm the host of the Tiger Technicians Hour, 11 o'clock to 12, every weekday, every market day, I should say, in the week. And today being the 20th of March, I also wanted to mention that for those of you who might, this is the first time you're hearing me, and I'm doing Larry's show, so you're not used to either my voice or the fact that I am one of the hosts on TFNN. I've been here actually over 11 years. In fact, I think this could very well be the 12th year, starting right now in March. Well, April will be the 12th year, starting the 12th year. Yeah, right in the front page. If you go to Subscriber Webinar by Basil Chapman, get the opening call, you'll get my newsletter, which is usually a 2-week free subscription, a daily newsletter. We're making it a monthly because this is such an important period in the market, as well as you get my free webinar tonight. So there's still time, and I know it's filling up very quickly. But at the same time, the technique and the methodology and all the technical aspects that we have right here at TFNN to be able to host as many people as we want is there. So if you'll be able to come into the second Tiger's Den tonight, and come if you're new to this, come a little early so that you can be absolutely sure to be set up right when I start. I'm going right through a very detailed explanation of the MACD. It's a webinar on the MACD and the slow stochastic. And in this webinar, I'll be going through all the technical aspects of these two indicators that I use and use a lot. I like them very much. And because I want to you're going to be able to archive it for 30 days free. You're just going to be able to archive it whenever you want, together with the explanations that I give to the charts that I have, shorted or going long or whatever it is in the newsletter. That's in the Traders Corner. That's the last chart that goes out. They start going out 6:30, 7 o'clock in the morning, but 8:35, that's when I send out the last one, which is the Traders Corner. If you don't have time for that, I just do a brief summary, right? 1 paragraph summary, 4 or 5 lines, and then I go right on to about 15 bullet points, starting with the Dow Diamonds, everything that you need to be looking at for parameters, etc. So it's a very detailed report, and I think that tonight you're going to get a lot out of the webinar. So it's right there. So go to the front page. There's time to check it out. And if you have questions, the office is fabulous. They'll help you a lot. So I'm looking at the home builds. I'm saying, hey, there's nothing there. So I'm also looking at the XLF. Now, Larry likes to look at the XLF. XLF is doing very well. I had a call here just a short while ago in my show talking about Goldman Sachs and Visa. Well, they're in the financials, but they're not the banks. Look, the banks, XLF, are doing up today $1.17, well, 1.17%. up 26 cents at 22.39. Look at Bank of America. That's very nice. Good action. Strong leg C breaking out of the pattern that I call the falling axe. Those two trend lines. One line goes down from a series of tops and the other goes to much lower lows at the bottom. Nice action. This is a bit of a breakout that we're looking at now because the Dow's up 87, S&P's up 7.86. Now, I expected that we would give back some, at least 40 to 50 points of the extra loss that we made yesterday. This is now a little bit more. This is a Dow at 16,309. Nice action. I thought that the 16,290s would offer a lot of resistance, which it did, but now we're squeaking higher. So that's going to be important. Let's go to Brent in Martinez, California. Hi, Brent. How are you?
Hey, Basil. How are you today?
I'm very well, thank you. You'd like to look at?
Obviously, always appreciate your analysis. I was calling about whichever you prefer to do, either the natural gas contract or the UNG, please.
So let's do them both because they have slightly different price points here. At NG is the way I get the continuous contract. Now, I made a statement just recently looking at UNG saying, I think that this is a top. I think that this is a top of consequence, and I would not be surprised. Now, natural gas trading at 4.387. That is in the continuous contract. Let me just see NGM. I'll go to the June contract. Trading at 4.401. Yeah. You see, natural gas made a peak D in the Chapman wave methodology. That's what we look for, at least a peak D, the fourth highest peak, at 4.893 on the 24th of February. Now look what's happened. It's got a whole bunch of techniques that are involved here, but the easiest one, the most easy visual one that I'll be showing tonight is, if you look at the chart pattern, there's the H pattern that has failed once, and it's going to fail again if it takes out 4.346, the low of the 14th. But look at the MACD. I'm going to show how important the MACD is, how when it deflects lower, that's a deflection there. With a quicker moving average, the green line couldn't even break above the red line, the slower. And the stochastic had a strong rally, but there was no price appreciation. I think this is very weak. I think that the move in natural gas, and I'm going to explain something right now. Let me just move. The peak D in the weekly chart tells me that this could be a lot more serious, but here's something else I'm going to talk about in the webinar tonight. When you have a MACD that makes a big turn from the upside to the downside, but has not yet crossed negative, it says, be prepared that at any point you could get a bounce. And if there is a bounce, 4.4597 would be the UNG resistance area, and that's, I'm talking about natural gas June contract. If I go to, it's a little clearer if I go to the UNG, because that UNG, United States Natural Gas Fund, this is what I was talking about when we were on air, and I said, I think right now we're making a leg E, and the pullback that we're having tells me that this could be a much deeper and longer decline, that gas for the moment could actually take quite a bit of a breather. So if you want to hold on 1 second, I'll give you downside parameters. I'll work on it during the break. You want to hold on?
Sure, thank you.
Okay, we've got Brent in Martinez, California. We've got George in New York waiting online. I'll be right back straight after this. Basil Chapman sending in for the one and only Larry Pesavento.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Hi, folks, we're back. Basil Chapman sitting for Larry Pesavento. Dow's up 108. Now, that's, it was almost, wasn't it almost the yesterday when it started? It was up about 60-something, and then woof, it went down to $170. And then it came back a little bit to the close. So very good action. This is that rotational correction that I've been talking about. But what's happening is when we're looking at certain stocks like natural gas, they are ignoring a gold that had its spectacular run. It's come back a bit quite nicely, but in fact it's had a big pullback. So Brent, this is what I'm looking at. If you're looking at UNG, I'm suspecting that the big test will be 24.10. 24.10 was the low on the 13th, and I'm suspecting that based on the patterns that I'm looking at, we are getting really close to both a test of support and a bounce off. And that bounce would say it's only a bounce. The high of last week of 25.78, about $1 and a quarter, maybe $1.50. Yep, it could get above that, but the most important thing is that there's a rectangle formation that's forming, and the low of 22.50 that was made on the 10th of February, I've already put this in as a rectangle formation with the trading range. I suspect that we'll be coming down toward, I don't know if we'll get that right away, but we'll be coming down toward the 22.50 area over a period of a few weeks, and that the best of the natural gas for now, the best gains have been made. It needs time to consolidate, and it's going to be a very important consolidation because the actual natural gas contract itself did get to above the fives. That was my target. It actually went even higher. It went to the continuous. It went to 5.668. And I thought the 520, 525 area would be the high, went a little bit higher. I think it's kind of done, but the magnet of 4.83 of the 200-period moving average in the weekly chart later on will come back and be the focus. And the fact that the fast-moving average of the MACD, I must make a note of this for my webinar tonight, if I do get a chance, weekly natural gas at NG MACDs. I call it the fast-moving average. It isn't technically 100% correct, but that's what I call it. That's what I'd be looking at. So I hope that helps you. Those are the parameters I'd be looking at.
Thank you very much, Basil. I look forward to your webinar tonight.
Thank you very much. Folks, that's that webinar that I just spoke about, front page of TFNN. Check it out. I think it's going to be really beneficial. Let's go to George in New York. Hi, George. How are you?
Basil, good afternoon. How are you today?
I'm well. I was just thinking of you yesterday because it suddenly occurred to me that I hadn't looked at OKE, O-K-E, which is what we've often spoken about over the years. And it had a spectacular move and then gapped down huge. I'm not sure what that's about, but I'm watching this one because if it's going to start to break down, under 50, it's a 59 right now, OKE. This is One Oak Inc. That's going to be telling me a little bit.
That's not me. I haven't followed that equity.
Well, you know what? I remember that I brought it up a long time ago, and you told me something about it. So it's been on my list, but it wasn't one of your stocks. But it had a spectacular move. Yeah, it had a spectacular move up to 68.55. Just yesterday I thought of you because I suddenly came across the stock. You'd like to look at what?
I'd like to review PBR. Petrobras.
Okay. So we were looking at it a little while back, maybe a couple of weeks ago, and I said at that point I didn't really see anything, but there was the H pattern that was really important. The MACD had rallied, stochastic had rallied, and all this thing had done was gone from the 10.50-ish area, 10.63 actually, back on the 5th of February, and it had managed to get to be at 11.84, and then it was starting to come back down. And I said, I don't see too much in it, but if you were going to nibble on it, nibble is the way to go. And then I looked at it for the first time right now. And it's had a fabulous move. It's gone from 10.20, made a lower low, but today's traveling. And right now, it's the high is 11.50. It's at 11.50, 11.48. PBR is Petróleo Brasileiro. It's not SS, it's SA ADS. So, what's the story now?
Well, no recent news except for one little upgrade, but what I'm looking to do is add to my positions on this. So that's why I was calling in to see what your thoughts were based on the last 3 days so far with the volume increasing.
Okay. I'm going to make a very easy suggestion, and I'll do it before the break, and then after the break, I'll discuss the more difficult one. The easy suggestion is to add a little bit more right here at 11:47, knowing that you really wanted to pull back a little bit, and that's what we'll talk about. So I'll be back with George in New York looking at PBR. Let me try it again. Petróleo Brasileiro SA ADS.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, everyone. We are back. Basil Chapman sitting for Larry Pesavento, and we're on with George in New York. We're looking at PBR, and PBR right now is up at 1147, up 57 cents. This is a very interesting chart formation. Why? Because the stochastic gave a very nice signal, but the MACD started off from a much higher level. Now, I'm always a little nervous about those because it says that the MACD now has limited upside, but that is contingent upon how deep a pullback you get when you get it. So far it's leg A. So I jump over to my 120-minute chart. Second time it's pushed above the 200-period moving average. The last time it did that in the 120, it was in peak F on the 25th of February at 1184, and then it plunged in that pattern I call the Eiffel Tower, straight up, straight down. Then it got a single leg, another Eiffel Tower, straight up, straight down. And then it went ABC, took a little longer, still made the H pattern, made lower lows, lower highs, lower lows. Then it does it again, goes peak A, I guess think that's BC, a failure. And now it's got a huge A to B to C, and it's holding very well. So here's my recommendation. Realizing that the big resistance coming up is going to be at 1184. That was the high of the 25th of February. I'm inclined to say to you, you've got a small position now. I'm going to say add another small position at this particular point. Why? Because as I see it in the 120-minute chart, leg C, it should pull back and then make a D, which is giving you time, and it's giving the price itself a little extra time to form a base. And you want to see a base form between 1127, that's the 200-period moving average that it broke above, and 1098, which is 9-period exponential moving average support. It's only 30 cents, but when you're talking about an $11 stock, 30 cents is quite a big percentage of the stock. So keeping that in mind, I'm suggesting that even though it's not the perfect price, because it would have been better if it was just maybe 20 cents down. Why? Because I wanted it to have room to climb to the 1184. So I'd much rather have more points to go to that level than being close by. But the fact that it's nicely over the high of 11.35 made on the 6th of March is very good. The fact that it's over the 200-period moving average, very good. MACD's gone vertical, so it's going to take some time for it to turn down. That's a good sign. And the stochastic is at 84%. I don't want a pullback with the stochastic. You can see every time it failed before in the 120-minute chart, stochastic went over 80%, and then within a few bars, plop, it went down below it. This time, the stochastic has to hold above 82%, above 80 to 82%, and actually get stronger. But I like it, and I would add another small position. And the reason why another small position is that the real test is that a little later on, I'd give it until next week. If next week there is a move that takes it over 1184, any pullback should make the 1150 to 1130 area very strong support. And if it does that and is holding, you could add a third small position, and that would be a little bit lower than you're buying it now, but you're going to appreciate that what you're adding now is a part of a threefold entry point. And all of it, I would not make a huge position. The whole thing is really a small position. So a third, and a third of the small position would come in later on. I would prefer after a peak A that holds very well, and then you want to see leg B start up. The moment leg B starts up, you want it to start clearing decisively, going into the 12s. That'll be really good action. So whole thing starts to fall apart because the weekly chart, this is the first decent move it's had, hasn't even closed above the 9-period moving average.
That's what I was going to ask you next on the weekly chart. What do you see?
Well, the weekly chart's another reason why I'm liking it, because I'm seeing a divergence. You see the way, if you're looking at my charts, that middle chart says that's the weekly. It says that the slow-moving average in the weekly chart is making a divergence as it rises. Yes. And the price came down to a lower low. Otherwise, I would not be telling you to add even a third position. I'd say stay with the one. Let's see how it goes. This looks to me like it's in the monthly as well, that it's the first decent attempt for Petróleo Brasileiro to actually make a move that can be sustained for, I wouldn't say a couple of months. I'm talking about a decent move that can be sustained into the summertime. So if it's going to do that.
Based on just quick fundamental analysis, it's trading on the book because your book value is $24, let's say.
Wow.
And just simple analysis, it could really trade up anywhere from $12 to $20 just based on earnings.
Except that we do know that in this area, those projections sometimes can be completely distorted when out of the blue there are exogenous events or whatever it is that aren't quite either on the book or they suddenly show up, and then that can all change. But I would say even that is 100% higher than the price that it's at now.
Like technical analysis, it's based on probabilities and it's based on historical data I go by. And
the data that they tell you, right. So
correct.
I like what I'm seeing. I think that it is the start of a move that I would say that if this thing can go to $12.55 in April and not break after that, not break under 11. Oh, I'd like it not to break under 1160, but it pulls back, but it doesn't really break down into the mid 11s for long, just 1 week, and the next week it spikes back up again. That would be the start of a cup formation in the weekly, which would help the cup formation in the monthly. But even then, the monthly, I have to set aside the daily, the weekly are the charts that we're looking at right now, and they are improving.
All right, very good. Really appreciate the time. today.
Good eye, George, and I'm going to be watching this one real closely.
Basil, take a look when you get a chance at Sun, SUNE, because they're planning to cut up into two companies, as I had mentioned to you a long time ago.
This is SUNE, right?
Yes.
I've got the weekly chart, the monthly chart in leg D. I haven't got this is trading at, this is SunEdison. SunEdison. And the weekly chart, I think did this quickly. So let me just do this. I haven't got anybody waiting right now. I think it's a good one to look at. I'm going to go, here is A, B, C, D, another one, A, B, C, huh? Let me just double check. Yeah, that's a C. So there's your D. Oh, this is going to be very interesting. So this is 840. So this is D right here. Good. Doji D on the 200 period moving, 200 period moving average. A. There we go. A, B, C, D. And then it goes, I don't know if this is E or F. To me, I'm going to say, I'm going to call this E/A and F/B with a very good chance that, good eye. Yes, you did mention this. So this is trading, folks, SUNE.
This was a long time ago. I mentioned this on
I remember.
To go into positions.
Yeah, and this one is trading up. This is at 21.65, up 97 cents. All it needs to do is at 21.93. If it goes to 21.94, especially if it does it this week, that's going to be, I'm going to call that leg C, the monthly chart. Wow. Oh, that's right. I remember this is a stock that once traded at 96.08 back in December of 2007, and it pulled back a little bit down to $1.44 back in June of 2012. Oh, good eye. This is really
getting back with General Electric, I just want to bring something to your attention, which I'm sure you're aware of, but they are going to spin off their finance unit this year.
Yes.
Okay. So now, that could also give us a little upside out of GE.
Well, there are two ways of looking at it. I suspect, yes. The other might be that if the financials are doing very well, people are going to say, oh, GE, you keep it and keep it and keep it. And then just as you're turning the corner, what do? So that's another way of looking.
I find when this happens, in all honesty, they could focus on their core businesses, and they'll make more acquisitions in the oil and what I call the parts business related to the oil industry.
They've gone very big in that area, yes.
Yes.
So I'm watching. I don't mind getting back into GE. We're kind of out of it now, and it hasn't been acting very well. Even today, it can't participate. It's down 9 cents at 25.19. Right now, it should be at 26.80 or something like that. Something's going on there. But I'm keeping my eye on GE. I haven't written it off. And SUNE is formerly Wafer.
Yes.
MEMC.
Yes, remember, a very long time ago we had done
Yeah, that's what you told me. That's why it was. That's why the SUNE symbol. I'm saying to myself, this is fairly recent, and I couldn't place it. It's all coming back to me. I'm slow when it comes to that stuff, but now I'm getting it.
And just one more thing I'll tell you is I'm still nuts about Diamond Foods.
What's the symbol?
DMND.
Diamond Foods. I thought you said boots. I'm saying to myself, boots. Diamond Foods, yes. Diamond Foods, they were doing everything perfectly, and then just messed up back in 2011, I think it was. They take over. They had a problem, right?
Yes.
Right. And now it's back at 34.70. Hey, another one that's absolutely fabulous. Hey, good eye.
So the only problem is Staples we still have, and that we'll see going forward.
I think that Staples is working very hard to turn the corner. Even, let's see, today, what did I get from Staples? I'm getting stuff from Staples, which is even making me shop there even a tad more than I need to because the offers are getting so good. I don't know if they're giving away too much, but they're making, for the first time, they've got nice discounts, and they're doing some really good things. I think they will turn around, but it's a tough business.
It is, but their online retail does extremely well. You know, they are the number 2 online retailer
That's what I've been told, and I think that's way to their benefit, because once you're in this business in the early stages, it can really accelerate later on. I'm just doing the diamond. Oh man, big support at 33.07 to 32.19. I'm going to be watching this one as well.
Wonderful.
So great! Thank you so much for calling, George. I appreciate that.
Thank you. All the best.
You too. Thank you.
Be well.
So, folks, I was just checking my IMs from my engineers to see if anyone's online. Now, so let's do this. We've got this is a very important move that we've got right now in the Dow, up 124 in the Dow. So, what is it doing? It's now getting back all of the gains that it lost yesterday. Let me just get to the chart right now. INDU. And good candle, and most importantly, that MACD. I'm following this MACD. I'm not going to ignore the fact that it could, in fact, break to that downtrend line, which is very strong. The moment it gets even close, if it goes over the candle of the 13th of 16405.07, I just have to say, you know what? If they want to buy this, I'll be looking at the upside. I'm quite prepared to do that, because that MACD was failing, and was failing this morning when it's towards the low. Well, not even at the lows, but even going towards the lows. Now, all of a sudden, the distance between the fast-moving average, let me give it to you right now, the MACD is at 50.04, and the MACD average is at 60.89. That's the slow one. 60.89. Red. Yeah, so red is above the green, and that says to me that until it changes and green goes above red, we've still got to look at this as a counter-trend rally. But I'm impressed. You cannot be impressed with a move like this. It starts off, does kind of okay in the morning, early down, and then it comes back, goes positive, then it plunges again, and now it's up 121. Good action, Dow. I'm impressed. Let's do another thing. I want you to look at the VIX index. The volatility index is now at 14.78. It's way underneath the 9-period moving average of 15.14. Hey, this is nice action. So now I had a question. Basil, with the trend nearing the 0.41, this is the trend. Okay, let me go to the trend. The trend is right here. Okay, Basil. With the trend, it's at 0.4. It's at 0.50 right now. The low is 0.46. And the question is, with the trend nearing the 0.41 low of January the 17th, which was a Friday, on January 20th, the following Monday, we saw a gap up that quickly sold off and started to slide into February. Do you see any other indication of a major sell-off? Looking forward to this evening's webinar. Okay. Now, here's the question. Now, I think that the gap that was referred to, do you see anything? Do you see any other indication of a major sell-off? Now, I'm not sure whether that's implying a major sell-off in the trend or a major sell-off in the market. I'll deal with both, because after all, I think the question implies that. So I'm looking at this, and I've got the 120-minute chart right there. What I actually like to do is I'm going to go to the, what have we got? Yeah, we've got another segment coming up. It's a great question. I'm going to go into that segment with the 120-minute charts, and I'll talk about those factors. So right now, the Dow is up 127, S&P is up 11.9, 11.9. So the Dow is up 0.7%, 7.9%, S&P is up 0.64. We'll talk about that differential when we get back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Folks, stay tuned for Daryl's show. It's just a fabulous show. Great programming all the way through today. And just let me do this quickly. I'm going to go to the VIX in a moment, but I just want to tell you I had a question about CMG. And CMG is a Chipotle Mexican grill. Trading at 610, up 13.86. It's in leg D in the 120-minute chart, leg F/B in the daily, and D in the weekly. And I got no choice but to call it C in the monthly. I'm going to say just step away for now. Don't. I mean, if you're thinking of shorting it, don't. Just have a little patience. It'll give you an opportunity. All of those stocks, Panera as well, all of them involved in the food. Food has gone up, and these stocks are going up. I don't know what the story is. Now it's leg D in the weekly chart that I've been waiting for in Panera, but hold off for now. Now let's get back to the VIX index, because this is very important. I'll spend some time on it tonight. The VIX, it made a peak D in the 120-minute chart, gap down. Gaps don't have to be filled immediately. Look, the gap that was there, that circled area from back in March the 3rd, took quite a while before it got filled in. Well, about 2 weeks or 3 weeks. So these things sometimes can be even longer than that, especially when it's coming down. Coming down says, I'm done. and it could take weeks and weeks and weeks. So I don't look at gaps in the VIX as objectives to the upside. Only when you start to get close to it. The objective in the VIX right now is if the volatility index goes to the 1430 area or into the 13s, that is really, that's buying pressure, and that's going to keep the market going at least sideways to higher. It won't be pulling back. Now, the only way to pull back is if by Friday afternoon or Monday, if the VIX starts to push back into the 15s and goes over 1562. A close above 1562 on any day would be very positive. Is this a reflex rally? I just think it's part of the rotational correction. I just keep emphasizing the rotational correction. That's why our only pure long stock is up huge, and it shouldn't be. It's in an area that people just deride all the time. And that's telling me that fund managers are looking for what was weak, and they're trying to turn them into strong areas. So on the day, as we wrap up here, I'll be back with Tom at about 4:20. Don't forget, go to the front page of TFNN, check out my webinar coming up tonight. It's really, I've been looking forward to this for a long time. This is you get the opening call for free for a month, and you have 30 days to look at the free webinar that you'll be doing tonight. You'll only be able to go to the webinar if you're part of my subscription service. So please check it out. It's on the MACD and the slow stochastic. I'll have to include a couple of other things, but just in passing, mostly I'll be going through the details, how I use it, why I use it, what you got to look for, and then we will be looking at examples in the remaining time. But you'll be able to archive that and be able to go through all those notes in great detail. Let's just make it real easy. The VIX index is part of the clue. I told you right now. In the low 14s, buying pressure. Suddenly turns around and goes above the high of today, 1562. That's going to be negative for the market. I'm impressed with these big sudden spikes to the upside, but we've also had spikes to the downside. I'll make it real clear. In the Dow, right now, a close above the close of 3 days ago of 16,369 means you've decisively taken out the falling axe formation resistance, and that you can, in fact, go to the next peak, which was on the 13th at 16,405. If you take that out, the only peak on the left that's left is 16,505, the all-time high, and a trend line resistance that comes in at about 16,441. If there's a turn down, and today the market in the end only closes up 45 points, and the S&P only 3.5 points, that'll be negative action. So the close today and tomorrow for the weekly chart are really important. Have a great day. Hope to see you tonight, and stay tuned for Daryl, and I'll be back tomorrow. Guest host will be Steve Rose will be the guest host for Thinkorswim coming up. Have a great day, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.